What is going on, y'all? It's your boy Smc-Cyr back with another video. It is day 3 of this boot camp. Um, I don't really have any plans for today, so I'll show you guys 4X Factory quick. I actually just got back from the gym. I didn't place any trades today, but there was no news, as you can see. We're on the 1 hour time frame currently. I was personally looking for either this gap to get filled or some low resistance liquidity to get swept, which is what is happening. But I got off around 9:06 today, probably. All right, and this is really what we were dealing with all morning. It was quite choppy. So as I see that, and I see that there's really no levels that we're bouncing off of besides we respected this 30-minute gap on open, but we did close below it. Or well, we actually didn't close below it. It was very close. So I was looking to take that bullish gap essentially as a continuation confluence to this unfilled new week opening gap. And yeah, that was really it for the day. Really didn't even put my position tool on the charts. I was kind of just so yeah, you guys know that I got a guitar yesterday. I'm learning Need To by Pine Grove right now, and that shit is like I'm almost mastered, actually. I almost mastered that shit. But yeah. Need to hit my inhaler quick. Little Kirk. So I guess we're gonna just get straight into liquidity today. Right? We will turn that off quick and go to this slide. Alright. Move my face a little bit. Alrighty, guys. Liquidity sweeps are I use them as a confirmation confluence. I don't use them as my entry all the time. Like very rarely I'm using that as my entry. But sometimes they are very obvious, and sometimes you can just ride them the whole way. You can notice that, for example, low gets swept, right? So current price action is coming underneath that old low, wicking underneath it, but not closing underneath it. And then you see strong movement away from that low. That's your confirmation for longs, then, right? And then you scale down to the lower time frames and obviously look for your precision entry. But we're just going to get into the technicals and definitions, I guess, of liquidity sweeps. So when price draws to higher lows and takes them out, sweeps them, and by taking them out, I mean stopping the people out that went long or short there. This provides institutions, the market makers, to place their orders, ultimately reversing the direction of the market. This occurs at the prominent highs, untouched highs, and lows where liquidity lies. So I can go back to my chart, and basically liquidity, how we use liquidity as traders is we call them draws on liquidity, right? So those draws are where you target to exit your trade or look for like certain draws to get swept to enter, you know? So they can be used very universally. So you see this very big wick here. That is obviously that's a data wick. That's Trump news. So there's a lot of liquidity here, right? A lot of people are buying this up, right? And now we're gonna come down and probably sweep this low, and we could potentially get a reaction off of it to the upside. saying there, hopefully. So it can be used to help identify your bias. I'll move this here. It can be used to help identify your bias and provide trade entries. It helps you figure out where price might go, obviously. And then I have a little note here. You may often see a high or low get wicked above or below. Consider this a grab. So it's a liquidity grab. There's my camera right there. And then look for reversal. You'll notice this more with time in the markets. Unfortunately, time is the best teacher. I'm not the best teacher out there. Time is. Time and your losses are how you will learn. That's really all I have on liquidity here. Oh yeah, I have it right here. Missed this slide. So liquidity is an ICT concept, right? Well, it's not just an ICT concept. It's used in the real world, right? Like your assets, how liquid are they? You know, like how easily can you sell your assets? Does that make sense? Like, let's say I have a car. How easy can I sell that shit? I could sell it in like 3 days on Carvana or some shit. That means it's an extremely liquid asset. Or like a house isn't as liquid because houses can be on the market for months and months at a time. You know, you have to have a freaking good house in a good area most of the time for it to be quite liquid. You know, and even like mansions, not everyone has the money to buy them, so they're not liquid. Like just because you own an expensive property doesn't make it liquid. So liquidity in trading is at the foundation of market efficiency. It affects everything from trade execution speed to overall transaction costs and strategic risk management, making it an important topic in one's learning journey. So I will never actually place a trade without a liquidity sweep. You're asking for a loss if you do most of the time, honestly. You need some sort of manipulation, and that's my favorite type, I guess, liquidity sweeps. So we will just mark out a couple of liquidity sweeps for you then. Alright, guys. Alright, so the prominent untouched highs and lows, right? Okay, here's a high. Right? We'll go a couple candles so that we actually make the high. Okay, so there's a high formed here, as you can see. This is like actually perfect. I took this shit on Friday actually. Oh, this is the exact trade I took on Friday, I think. Yeah, the short. Okay, you see this high? We come up, wick above it. Don't close above that high, right? We don't even close above it. Okay, we're rejecting, and this is where I would enter, pretty much. And then bang, a dump and then a pump. You see that, man? And then obviously, as you're in this trade, you're gonna target draws and liquidity to the downside, right? Obviously, it doesn't play out all the way and get these relative equal lows, but the 200-point candle off of a simple liquidity sweep. So obviously there is more to the strategy. I'm just showing you guys this because we're trying to build everything day by day and start slow. You know, you don't, you shouldn't have to like have the need, I guess, to learn every confluence in one day. The more you spread them out and like perfect them one by one, I think the better. You know, because it's hard to identify one confluence sometimes as it is. Like, you guys watching this right now, I know there's probably a couple of you that know what a break of structure is, but half of you probably can't fucking mark one out, right? Or a change in state of delivery, or a breaker block, or an order block, or a fair value gap, or a rejection block. You guys don't know how to mark that shit out. So, or even use it, or take a play off of it. Or equilibrium, Fibonacci. That's pretty much every ICT concept off the dome right there. Um, IFEGs, obviously. But I guess we will go into the next slide then. Trading sessions, right? Trading sessions and kill zones. Asia session is from 6 p.m. to 2 a.m. and the gold kill zone is between 6 p.m. and 8 p.m. So that's basically when gold is the most fucking hot, the most active, right? And then London session's usually pretty active. Usually just trends or consolidates most of the time. You know, it's either continuation from Asia or um, setting up for a reversal in New York session, essentially. So that leads us to the New York then. Pre-market is 7:30 to 8:30 in where I live. I live in Wisconsin. So market opens at 8:30 every day or every weekday. And then on like 5 p.m. on Sundays it opens for the week. But don't fucking trade on Sundays. Sometimes you can get NWOG fills, but they're just too low probability for me to take them all the time and spend my Sunday night on the charts when I could be like strumming that guitar and reading a book or something. Like, no, I'm gonna stay off the charts on Sunday. I don't need the money. You know, I'd rather keep my money on the table for the week and not like go into the week already on a loss, if you will. So yeah, I basically look to place my trades between 850 and 910. You're most of the time better off just sitting out the first 15 to 20 minutes of market open unless there's a beautiful Judas swing and there's data highs or lows resting above or below, you know, then that's okay. You can take a Judas swing once in a while if you have high conviction in that trade. But as new traders, you don't have any conviction, so you have to build that up over time. And the strategy that we use is the most profitable within the kill zone. It's just back tested throughout many, many, many years. Alright? And I think that's really it for us today. So, with like the all the trading sessions, right? I am too lazy to mark them out, so just look up trading sessions on trading sessions. Any of these will probably work, right? What does this one look like? Sounds a little funky. What the fuck? Alright, y'all. Yeah, just use this one that I originally was using. It's nicer, actually. Just, that's like, essentially, this low, good draw. This low, good draw. It's literally as easy as that if you just know how to use your eyeballs, I guess. But I hope this video helped you guys. it's kind of just another perspective of just how simple liquidity sweeps are, and just going over trading sessions today. So, yeah, you guys have a good day. Peace, y'all.